All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. My name is Ciaran O'Brien and with me is Mr. Peter O'Malley. Peter, hello.
Ciaran, great to see you.
Great to see you for another week. Peter, I want to jump in today's episode. We're going to talk a lot about sales and rentals and what's going on in the Sydney market, but I thought if it's okay with you, we might start the episode today just discussing the latest decision from the RBA around their monetary policy, given it's probably the most important thing that's happened in the last week since we last spoke.
Yeah, thanks, Ciaran. Look, in a surprise to no one, they've kept rates on hold. The decision was unanimous by the board. Probably the thing that caused the most discussion coming out of the meeting was that there was a sense that we may have seen the last of rate cuts for the time being. There wasn't anything in here to suggest the RBA are ready to pull the trigger again, and they're acutely aware that the employment market is still tight and that household confidence has returned on the back of 3 rate cuts this year, and therefore there could be in the future some upward pressure on inflation, and that's aided and abetted by what's going on in America with the tariffs, and Trump's policies are inflationary, and obviously inflation's rising in America as we've discussed previously, and they've cut interest rates while inflation is going up. The price of gold, which is a barometer.
It was about 5,200, I think, when I saw it yesterday. Australian?
Well, no, it's a lot higher than that. It's nudging 5,900 Australian and nudging $3,863 American.
Yeah, wow.
So to give people an idea, if we want to talk gold, in the last 30 days, the price of gold in Australian dollars has moved from 5,400 to 5,844, and in the last 30 days in US dollars, it's moved from just over 3,500 to $3,862 as we speak.
Yeah, 10%. That's a crazy rise. As you say, no surprise from the RBA that they did decide to hold rates, and they do mention their policy that unemployment's steady, but it's still kind of in a bit of a precarious situation. One thing that they do mention in this statement, which I thought was interesting and obviously ties into what we talk about a lot, is they mention that the housing market is a key factor in their decision-making here. They say the housing market is strengthening. They think it's a sign that interest rate cuts are having an effect, whether it's the desired effect or not, remains to be seen. But they, to me, they make the point that housing is too strong, credit's available, and they're concerned that, if anything, it's just going to run from here. And to me, it seems like they're leaving the door open to go up or down, depending on, really what happens over the next quarter.
I'm glad you raised that point, because I go to an economist that's a bit of a contrarian when it comes to these matters, Judo Bank's Warren Hogan. And he wrote on social media after the rate decision, he said the RBA is tiptoeing away from rate cuts. The next move is now evenly balanced between a hike and a cut. Timeframes are important as the rate cut window likely closes around mid-2026. The hiking window opens around May 2026.
Yeah. So he's suggesting that the same thing. It's a bit of a line ball at this stage, but we have
he's saying it's a line ball as to whether the next move is up or down.
But what's his rationale for the timing, do you think? Why is he suggesting that if we don't do anything before May, as in cut before May, that it's an inevitability
I think markets have priced in that inflation in 12 months will be moving up again, could be picking up again based on what's happening in America.
Yeah, okay.
So if you look at the yields, the yields in America, they are suggesting that the Federal Reserve can cut at the moment, but inflation and markets will force them to increase by even more later.
Well, they can, but should they? I mean, that's the million-dollar question, right?
Well, it'll take someone big to stand up to Trump if that's what's going to happen. But in fairness to Warren Hogan, he was someone when everyone was calling for rate cuts, saying be careful about what you wish for because a rate cut today can mean a rate hike tomorrow, which will ultimately help nobody.
Yeah. Yeah. And as we've said for however long now, 12 months, maybe longer on the podcast here, there was a whole period, and there still is for many people, where a rate hold is akin to a rate rise because of the excess stress. So his argument holds really in line with what we had said, that a little bit, a bit more prolonged pain at a current level is going to be better in the long run than a bit of short-term gain and then inevitably a hike again, which I suspect will come as a surprise to a lot of people if it does happen. We've kind of been through this period of tough economic conditions. Now we've had relief, and I think there'll be a lot of people that think, surely we're not going to go back up now.
Look, there's a couple of factors to this. The first is that inflation can be imported into Australia no matter what Australia is doing.
Yeah.
So the RBA are not in complete control of the inflation number here in Australia, nor is the government. The other one, which I think is coming through here, is that if we cut rates to give cost of living relief and then it pops out as higher property prices, as we've always said, people will refinance against their newfound equity in their house and continue expending and living in the economy as they were, meaning the rate battle's not being won, but the property bubble is just expanding.
Yeah.
And the property bubble is going to continue to expand under certain conditions because
not enough supply.
Not enough supply.
Too many people wanting houses
coming in through the front door.
Yeah. I've got your card next to me that outlines your two key points. Look, it's actually a pretty good segue, I think, Pete. One of the other things I want to talk about, actually, before we do that, do you think that most people had expected the RBA would hold? Do you think that there's been any shift in sentiment as a result of the announcement on the 30th? And, anyone that you've spoken to in the market, are they expressing disappointment? Are they expressing kind of ambivalence? Is there any sense out there that people actually, really paid that much attention to this particular rates announcement?
I think the statement was bigger than the decision on this particular month. No one really expected the RBA to cut or hike for that matter on September 30. I've seen some seasoned economists, people who know a lot more about money markets than you and I do, and they are slowly but surely saying, forget 2 rate cuts, you'll be lucky if you see one more.
Yeah.
That was Mark Burris's view for what it's worth. He sort of picked up the same tone in the RBA statement that most of us did, that they're, based on the current trajectory, they're at pretty much close to the end of their rate cutting cycle, barring an international event. Now, the RBA in their statement did use those lines that I have been talking about after every RBA meeting, which is the board stands well positioned to respond decisively to international developments if they do occur.
They say here, they'll be attentive to the data and the evolving assessment of the outlook and risks to guide its decisions. In doing so, it will pay close attention to developments in the global economy and financial markets, trends in domestic demand, and the outlook for inflation and the labour market, all the things you have mentioned. Yeah. They've said that in the past, and they made decisions that seem counter to the data that exists. So, this statement to me, though, does seem a little bit more definitive than the last one, in the sense that it seems to close the loop a little bit and say, well, we really now we've made the decision we can, and we have to now look outward and see where the next movement is.
The data didn't support a rate cut or a rate hike.
Not this time, but the one before. I think it was.
But back in July, the data was right where it needed to be.
Yeah.
But there was something that spooked the RBA to say, we're not going to cut. We're going to shock the market. We're going to sit on hold and we're going to watch.
Yeah.
Then they're essentially, you're going about Powell being bullied in America. Well, the RBA were essentially bullied into a rate cut here in August.
Of course, yeah.
After not delivering in July. But then data came out after that meeting. It was like, now I see, as we discussed in one of our previous podcasts, now I see what the RBA is saying, because there was a little bit of upward pressure on inflation and where the economy was going, and property prices. PropTrack have got Sydney property prices up 0.7% for the month. In Sydney, annualised, that's decisive
Yeah,
growth.
strong.
So there's just a few things there that have probably got the RBA saying no. We've got our settings about right.
And it can't be, just before we move on to talk about PropTrack and SQM's kind of data for the week and the month, we also can't forget that, globally, excluding economy, we're moving into a pretty uncertain geopolitical environment at the moment. I think this is probably the most active geopolitical climate we've been in for quite some time. And to me, certainly, it feels like there's things constantly evolving, and that has to be playing a role on, we've talked about the physical impact of things like shipping lanes, but it's also playing a role on the sentiment of just global relations, I think, which is going to impact the market here.
It's absolutely clear that a number of major countries are preparing for war.
Yeah. Or actively beginning.
Yeah.
Yeah.
Like America are doubling their stockpiles.
Or the
weapon
generals just got
stockpiles.
called in for a weird and
France-
seemingly pointless meeting.
France has told their hospitals to be ready
On alert. Yeah.
for war in the next few years and to be able to take a certain number of casualties. Oh, it's really dialing up. It's absolutely frightening.
Yeah. Housing in Sydney will be the least of the world's concerns, that's for sure. As we move forward then, Pete, you mentioned PropTrack's got house prices up 0.7% in Sydney for the month, annualised, which is very strong. What else does PropTrack have to say about Sydney sales, and how, alongside that, how does SQM Research's data around auction clearances and stock levels on the market talk to us?
We're going into grand final weekend, October Day long weekend in Sydney, a pretty quiet weekend. So the auctions last weekend in terms of numbers were very high. 1,623 auctions last week in Sydney with a clearance rate of 53%. 474 were sold prior, 387 under the hammer. So again, vendors on the whole are taking the early money, which is understandable. So what Sydney's experiencing, whilst it's strong, we're also seeing that more broadly around the country, that house prices are edging up. So there's no doubt that, as PropTrack have said in a recent statement, demand has re-accelerated in Sydney and Melbourne, marking a turnaround from the slower conditions observed in late 2024. Darwin has swung from inertia in 2024 to leading annual growth amongst the capitals, and Melbourne is closing in on its 2022 peak with relative affordability and strong population growth, restoring its appeal. So property markets are starting to bubble, which will definitely keep the RBA on the sideline. And if it gets too strong, force the RBA's hand, as Warren Hogan has suggested. On the ground, we're seeing really tight conditions in the rental market. Vacancy's really low. We expect that when there's another wave of international students and people coming into the city for the new year, rental open houses over the summer will be hotly contested. Tenants that don't want to move should really look to lock in something with their landlord at the moment. And interestingly, you've always, as a real estate agent, you've always got hot stock. A percentage of your stock is always hot, and there's a percentage of it that's always stuck and needs a little bit more work. We've started selling some of our listings that have been around longer than we would like, but they've started selling, and that's always a interesting sign that the market's coming alive when the buyers start picking off stock that's been around a little bit. So that suggests the market's really coming to the fore.
That's particularly interesting. You talk about the old stock being kind of cherry-picked by buyers, particularly because I'm sure last time we went through SQM's numbers, the total auction figure was about 1,100. And we're now at 1,600 odd. So that's a huge jump.
That's essentially a double weekend because you'll see the numbers come right back.
For the long weekend, of course.
Weekend. So it won't be 1,600 every weekend. Keeping in mind, just a quick recap, spring has 3 phases to it, mid-August to the October long weekend, October long weekend to essentially the Melbourne Cup Day, and then Melbourne Cup Day till early December. They're the 3 phases, unofficial phases of the spring market, and you'll find that most vendors slot themselves into one of those 3 phases. So a whole wave of sales and stocks gone through. It'll be a bit of a quiet weekend because of the weekend it is, school holidays, long weekend, and then it'll come out in the next weekend or 2 after that.
You mentioned also that one of the good ideas for tenants who are in leases at the moment would be to try and solidify something for the future, which, is always a good idea if you're happy with where you are. Are you finding through your own kind of contacts and clients within the business, are you finding that your tenants are firstly kind of educated to the market dynamics, and secondly, are you having requests come through the business to lock in even preemptively, or is the trend still, and I'm reflecting a little bit back to COVID, the trend still to just try and hunt around lease end time to get a better deal somewhere to try and, move around where that's a dangerous game right now.
There's not many, I won't say there's no one. There's very few people looking to play the game from a tenant's perspective.
They're just preferring to sit still.
Oh no, well, if the increase is fair and justifiable, they're agreeing to it. If it's excessive, they're not saying I won't pay it, I'm leaving. They're saying, look, that seems excessive. I've gone on Domain, realestate.com, and this is what I've seen that's comparable and what it's priced as. So I think this should be what the basis of the increase should be. So they're negotiating, which is fine. And then sometimes the landlord will run with that, and sometimes they won't. But yeah, that point that we saw during COVID, which is if you suggested an increase because the rental market was so soft during COVID, they'd just go online and they wouldn't even attempt to negotiate with you. They'd just send you a termination letter, and it's like, I found something cheaper. Don't worry about it. I'm out of here. Those days are long gone.
With the relatively low vacancy rates and the increased stock levels coming to market, have you seen any indication at this stage, and it's still early in spring, as you've said, that investors are looking to return into the Sydney market?
No.
What's the major factor, do you think? Is it prices, yield? What's
all of the above: prices, yield, over-regulation. You can get a decent return on cash still. We've only had 3 interest rate cuts, of course, so the cash rate's 3.6%. So what's the bank paying you, 4%?
So my bank's paying me 4.85.
Oh, well, that's probably overs for the current environment.
I think that's with ING for anyone who's interested. Yeah. They tend to pay high savings rates.
Yeah, so it's somewhere in the 4s. So if you can go 4s risk-free, or go and buy a property market that is rising and looks fully priced to get a fairly underwhelming yield relative to a risk-free 4-point-something% with the bank, you'd sit on your cash. You might play the
buy some gold.
Maybe it's too late. Maybe it's not.
It's a finite resource. I don't think it can ever
silver.
be too late.
Everyone I read to says that until you see silver break through $50, there's still price to run there as well. I think there's plenty of other places to park cash. Why would you park cash in property as an investor and then pay land tax?
Oh, look, I agree with all of those things, but that doesn't change the fact that there are investors always coming to the market, and it's something we've got.
Well, I wish there was. That's what they tell us in the media, that there's these greedy investors all taking advantage of negative gearing. It's like, well, I haven't met any in 10 years. You know what I mean? So this is the thing: is that people are squealing about the rental market. Let's beat up landlords. It's like, you can beat up landlords as much as you like. They'll just move their money somewhere else, which is what they've done. Rental books are shrinking right across the real estate industry. Yeah. There's no new supply, as much as there's new supply muted in the pipeline, and they're
muted's the right word.
Yeah, and they've got the Welcome to Australia doors wide open at the airport, and people are just freely flowing in here. So what do you think is going to happen to the rental market?
Do you think, and this is maybe asking a challenging question, but one of the big things in the US that tenants are constantly kind of barking about is, large corporate, Blackstone style companies investing in large swathes of rental property and land banking, et cetera, et cetera. Do you think, with the poor yields, the high prices, the unpredictability, the costs, do you think that is something of an inevitability or a likelihood here? As, mum and dad investors realise that it's a terrible opportunity for them. There's so many costs and risks involved. Do you think it will end up being a situation where corporates end up, corporates for lack of a better term, end up buying rentals and investments and then really monopolising and making it worse?
Look, never say never. You would hope not. But the way we're going, it can't be ruled out.
I think the conditions suit it, right?
I don't think it'll be in Sydney. But, if you're getting out into the regions, in the right locality, that could work with the right infrastructure. Yeah.
Well, let's hope it doesn't happen, that's for sure. As we move towards the end of today's discussion, Peter, there's a couple more things I want to just check off with you. The first one being, at the time of recording, we have just entered the phase where the first home buyers grant has come into effect. Now, I know we've touched on this a few times over the weeks, and you don't want to give too much credit to it, which is fine. I don't really want to talk about it too much either. But my question for you is, given that the policy is now theoretically in effect, have you had any shift in conversations? Has anyone come to you already and said, hey, I have access to this money now, we can get on board with it? Or inversely, have you had any vendors have discussions with you about their pricing or the campaign strategy now that this has come into effect?
Well, the bottom end of the market's been very sluggish for a long time. So when we've spoken about the strength of the market, it has tended to be higher prices. This will add some much needed stimulus and support for the bottom end of the market. And because there is a lot of B-grade built units out there, it'll take time for this to really, have an impact on the market. But over time, it could. So it's not like a complete cash, cash incentive that sort of turbocharges the first home buyer. It is very generous conditions for the first home buyer. And I think it'll play a bigger role in some markets than others. So I think affordable housing around $1 million in, Western Sydney, for example, will probably go really, really well.
Yep.
Whereas when we come into the inner city, is this going to make one-bedroom apartments around 800,000 that have got high strata levies and building defects, of which unfortunately there's too many of, is that going to make them suddenly appealing to first home buyers? We're not seeing that. We are seeing some first home buyers fresh to the market take a look at it on the back of this, but it's not going to create a boom instantly.
I wonder too, one of the things that I found in real estate, which I didn't realise before coming into the industry, is the banks or the lenders' hesitancy to lend out on apartments that are less than 40 square metres. So, those that then require a much higher LVR, 50% I think was kind of the standard. I wonder, and I don't know if you know the answer to this, but does the government's policy also override those sub 40 square metre apartments and allow for a 5% deposit? Because if it does, I think that will open up a huge section of the market that has previously been unattainable for many people because they couldn't get 50% upfront.
I don't think so. I don't think that would override the lenders' issues around that.
Yeah. Okay. Well, look, one of the big problems that first-home buyers have it tough is supply, and we talk about this all the time.
Yeah.
I think it's particularly important or relevant to talk about the fact that just in the last couple of days, your friends in the Inner West Council, particularly led by Mayor Darcy Byrne, approved 31,000 new apartments for the Inner West, which was met with huge amounts of opposition. It was also met with huge amounts of support. It was a really strong and polarising outcome. That seems like a good, it's one of the first positive things to come out of the idea to get more housing built. Have you any thoughts about, firstly, the Inner West's decision to approve those 31,000 and, any sense that there's been any real movement on this housing supply issue?
Look, so a couple of things that have come out in recent times. We've discussed the 10,000 new homes in Wallara.
Yep.
I saw a report. They've slated 4,000 new homes to go in cow paddocks out at Mulgoa. That was a Channel 7 report. I think Mirvac are behind that one.
Yep.
And then, as you quite correctly say, 30,000 new apartments were approved by Inner West Council for over the next 15 years. The ABC reported it as such. Labor councillors have used their numbers to push through a controversial plan to rezone swathes of residential land in Sydney's Inner West to build more than 30,000 high-density apartments over the next 15 years. The Our Fairer Future plan was passed by a single vote by the Inner West Council, with all 8 Labor councillors supporting the motion and the remaining 7 councillors voting against. The packed public gallery erupted as the result was declared, with applause from rows of supporters wearing Sydney Yimby T-shirts and cries of shame from residents opposed to the proposal. Now, You say that there's widespread opposition to 30,000 dwellings and widespread support. I would say there was support was for all of these apartments. My guess is it was fairly well confined to the 3 rows of people at that meeting.
I think that's probably a little bit pessimistic, Peter.
Well, I do. Well, I don't know if that is the case.
Yeah.
I am not running into anyone that's saying I have a plan that works. Can you hear me out? And I say, what is your plan? And they say, let's build 30,000 more new apartments in the inner west. Besides, apparently, the people that took up the front 3 rows with Yimby T-shirts on at this meeting.
Do you know, it doesn't escape me that the leader of the New South Wales Liberal Party just this week said that the Liberal Party he leads is a Yimby party into the future.
Oh, well, that's fine. I'm not talking along political lines. I don't see a case where the people have said flood the city with new entrants and then we'll build tens of thousands of new dwellings in every region to house them. I'm just not seeing anywhere where that has been something that the people were looking for.
Yeah.
And now we're being gaslighted, saying that, we're, what are they saying about people who are anti this? Shame from residents opposed to the proposal and using, what would you say, carefully crafted slogans like our fairer future plan.
I mean, that's an inspiring name for a plan, our fairer future. Everyone wants a fairer future. The approval process I think was inevitable because the Inner West Council is strong Labor. We know that. I am interested, or actually what caught me by surprise, and I don't know if it caught you by surprise, but 8,000 of the 31 are for the Parramatta Road corridor that we've talked about last time or the time before we spoke, and a number more, 8,000 I think around Camperdown and so on and so forth. But what was surprising was the original proposal was for more than 31,000. And a large majority of those ended up being negotiated out at the last minute in places like Dulwich Hill and Marrickville and possibly Petersham. I can't remember the third suburb.
Well, that's overreach. The government will overstate what they want, means of bringing it back so they're looking like they're listening and all of that. The reality is that Labor has a complete majority on the Inner West Council.
Yeah, of course.
So who of the Labor Party was really going to go against their 7 other colleagues on the night to make sure this didn't get up?
Well, the optimistic, democratic participant in me suggests that they're, working for the interests of their voting membership, right? And their constituency. That's the whole idea. But I do
they're not
understand
working for their constituents because no one's asking for this. They're working for their masters higher up. We've got to call it for what it is.
Yeah.
The federal government want this. The state government want this. The local Labor council here are just towing the line.
Yeah.
They're not working for the constituents.
No, I know they're not.
Yeah.
I'm just, again, I'm putting out there that that's what you're hoping your elected officials will do. But of course, in this case, it's all to fulfil, Chris Minns' agenda, which is to get these houses out and Albo's 1.2 million homes or whatever it might be. And I'm not
against development, but development of that magnitude in high density areas, the strain on the schools, the infrastructure, the roads, the trades.
Yeah.
It's like,
the schools is a massive one.
Yeah.
Most of the schools in the Inner West are completely at capacity.
Yeah.
You cannot, you can't get in anywhere. And there is, even where I live, which is in the Strathfield LGA, there are some local schools, public schools that are saying, look, we don't have space. Doesn't matter that you live here.
Yeah.
Which is crazy to me.
Yeah.
And it is going to get worse.
So we'll see how it all plays out. But, Chris Minns, we've discussed it before. Chris Minns was elected and then told us the week after he was elected that he had a mandate to build all these apartments in the inner city and I'm going to build up and not out. And it was like, I don't remember that being discussed at all.
No, I suspect that's what ChatGPT tells him when he downloads his conversations to it at night time, Peter.
I'll let you confirm or deny that with him next time you have dinner with him.
Look, interesting discussion. I certainly hope, regardless of the outcome with the approval, I certainly just hope that they have some rigorous standards in place to make sure that this is not another mass building project that ends up with shoddy construction, poor outcomes, Opal Towers and the like. Because Sydney does need to solve the crisis in some way. Whether this is the right answer or not, who knows? But at least, I can only hope that they do it properly regardless. Look, outside of that, Peter, good, robust discussion today. I certainly appreciate you coming in to talk.
Yeah, good to catch up. Thanks, Ciaran.
Good to talk to you, Peter. And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.